You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributor to Backroom Technician. This week on The Biz, the Disability Insurance for Business series, our tribute to Disability Awareness, May 2013. And on today's show, key person disability insurance with nationally recognized DI expert Dan Steenerson.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors. Sometimes people ask me, how big is it? Well, the people that are getting our feed direct in their email are 480,000 agents, and we're sitting there with about 165,000 page views a month from our complete distribution channels on our portals. So we're broadcasting, it's nationwide, actually, it's global. And think of this, shock value. Germany is our largest, outside the United States, our largest audience. I don't know why, but Deutschland über alles to you guys. Thank you very much. We're broadcasting right here in Fountain Hills, Arizona, home of America's largest fountain. And day 3, DI Dan Steenerson. Dan, I'm telling you, thanks for being here.
Thank you.
All that is DI in the business world and even individual, I mean, Dan knows it. Number one authority in DI in the United States, out on the street with our channels. Think about this. It is the forgotten insurance. And now I was talking about regular DI, and I said that in last week. But this week, business DI must be really forgotten, right?
Absolutely.
And this is the area I'm so blown away because after yesterday's show, if you didn't hear yesterday's show on business overhead expense, I think you should watch this because you may say, I think that's my business building play. I think that's how I can expand my practice by going into a business owner on that issue alone. If you missed that show, actually, if you missed any of our shows this week, before you get to today, I want you to go back out to our site and watch them in chronology. I think your learning experience will be a lot better. And when you do that, just go out to thebiz.tv. Now, Dan,
Yep.
We're talking about, now we've talked about a little bit about business succession and some of those things. But key person, now I always think about DI, that's a great recruiting tool for benefits. It's a great employee retaining idea for a benefit. But when I talk about key person, man, I got people in my organization that if something happened to them, I would pay dearly. They're franchise players, they're rainmakers, they're my operational kingpin, they're the linchpin of my entire company. If they go down, and I'm not worried about the death benefit, I got the term on that, but when people don't die, and of course we don't want them to die, and we don't want them to get disabled either, but you're going to get disabled. The odds of being disabled versus dying is, I don't know what the number is, the odds are like 20-1. So when I look at that, I feel as a business owner, I want to not only protect myself, even if I'm the franchise, but I have to get my kingpins, my key people that are involved. And by the way, that's not just rainmakers. How about that gal that's running the show A to Z, and without her, you'd be dead.
That's right.
So let's talk about key person and really hone in on why this is so important and why it plays so well when you're doing total business planning.
Right. Well, first of all, if you're a producer and you're selling life insurance with Keyman, this product should follow right in the wake of that sale because it's pretty much the same except you don't die. Now, when it comes to key person, it's always about the guy that has the secret sauce, the person that was indispensable to that business itself. If they become disabled, sick or hurt, cannot return back to work, then what happens is that the carrier will come in and indemnify the company. Remember, the benefit always goes to the company, not to the insured.
Mm-hmm. So let's just walk through this. I might have several key people, and I'm assuming there's no issues there.
To a certain degree.
Well, let's go to the edge here for a moment.
Sure.
All right. To a certain degree means, what's my limitation?
Well, the question would be, how many people in that business really knows the secret sauce?
Mm-hmm. So let's say I have a person that's secret sauce in regards to bringing revenue in.
Yes.
And I have another one that's operations, so without that person, I'm dead. I have to have that person.
Could be a possibility, yes.
And thirdly, let's say I have another person that's running another aspect of our show that is not really known. It seems to be back in the unseen world of my firm, but it really happens to just be the linchpin of the entire operation.
Yeah.
So can I take care of all three of those?
Potentially you can. It's generally not a product that you're going to want to sell to a business owner, only because the benefits that are generated or derived from that policy, what are you going to do with that? You're going to take those benefits and you're going to turn around and you're going to hire a recruiter, you're going to fly people in to interview, you're going to put them up at the hotel, and you're going to use that benefit to pay their salary maybe for the first year or so.
Yeah, I'm thinking of a person who really is dependent on, let's say in my example, I had 3 key people in this organization. Those 3 people, one of those people go down. Now, just like you said, well, now I got to spend money. I got to go out and recruit again. I got to pay a headhunter. Okay, so I'm out money on that.
That's right.
I finally go through the interview process. That takes time and money.
Yep.
Now I finally decide on somebody. I offer him or her the job, they accept.
Yes.
Now I got a learning curve training issue going on at the front end.
That's right.
My acquisition costs for one of my 3 people going down on a disability is enormous.
That's right. And it's bad enough that you have to replace that key person, but try replacing them without the funds coming in to do those very things. Mm-hmm. Yep.
Yeah, I mean, it's too expensive not to cover the franchise players, the people that are knocking it out of the park for you, whether in operations or revenue rainmaking. To me, this is a critical issue. And again, I just want to come to places where I don't think anybody's addressing it.
No, I don't believe so.
And again, by the way, not for a plug for one of our vendors, but Beckham Technician has an excellent piece on Key Person. And again, if you go out to our site, you can get the 30-day free look and pull it down. To me, I'd read that, get a good understanding, then go to Dan's section where he has a lot of stuff that he's written on this. Plus, again, we have a couple pieces on DI on this. Key people could be a real play for you to cover off and indemnify for a client who says, I could not live without these people. And this takes Key Person to a whole new place because generally I think about it as a death benefit issue. But most of the time, statistically, it's a disability issue.
And it's a wonderful question for a producer to ask their clients. What would you do in the event that your key person became so sick or hurt and could not come back to work?
I love the answer I heard a couple years ago. I don't know our passwords. I don't know our user codes. I don't know how to get on our own website. I can't even do my email if there's a problem. I can't get it to my phone to check my email without her being there. I'm telling you, that's what we're trying to cover. Hey, when we come back from the break, we're going to continue our discussion on Key Person Disability Insurance, part of our disability series with Dan Steenerson. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Dan Steenerson. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on the Beckham Technician icon for your 30-day free trial offer. You could see everything we're talking about DI. I have so much out there on that. It's unbelievable. And most of you know by now, I'm one of the contributing authors to it. It is a great issue for you for sales support and supporting material for almost every financial planning scenario. And remember, before moving forward with anything we talk on the show, especially because we have been talking about deductions and so forth, always consult your tax advisor. And if you're FINRA licensed, always check in with your broker-dealer compliance officer before you use anything we're talking about. We're talking about personal DI. Key person DI. And it's all part of our disability insurance series for business. And I want to shift a little. We talked about this yesterday, but I want to get into this because I guess I was too narrow in my thinking on business loans. I think business loans, we're buying this company. Yes, we want to indemnify the person who we're buying it from and the person who's taking out the loan. In case something happens, the bank wants a backup. So we go to the life insurance. It's routine. I do it all day long. I've been doing this for 30 years. Now I'm thinking about loans from a disability point of view. Some of the banks, and I see this as a play to get into the banks as well. You said yesterday, and I was kind of shocked, that some banks don't even write it into their to their arrangement, which is shocking since DI, the actual statistical odds of getting disabled rather than dying are way higher.
Absolutely.
So I'm surprised that
Yes.
institution, and I think that's a play to go to a bank and say, the institutions I work for actually embed that in there.
Yes.
You know, to me, to be proactive and say, I'm here to educate. This is what's happening. Here's the statistics. Here's this. Business loans. I never think about DI in business loans.
Well, and you know, you're really hitting on a very important point, and that is this. It's prospecting. What a wonderful way to develop a good source of leads by having a relationship with a bank. And the fact of the matter is that not all banks are going to require it, but those banks that embrace this type of loan, be it practice acquisition or refinancing on a particular business, those are the banks that are going to want to have that kind of coverage in force.
Well, let me go one step further than that. I'm just trying to think of a banking institution who's already requiring life insurance as an indemnification plan, who isn't thinking about disability. It costs them nothing to have that indemnified. This is a business expense. This isn't their expense. So I don't understand why all banks, all institutions would not fold this in and embed it as part of their legal arrangement. I mean, I'm just saying off the top of my head, what would be the reason for a bank not to do it?
Well, I think it's because their lending units aren't developed enough to be able to actually address something like this. They do the life insurance, but some of them will not do the DI, or it's not on their radar screen to actually do the DI product.
Well, I think this is a great tool, and I'm going to make sure that this segment goes to our bank channel, because I think that's a very important issue. If you're a bank, you're a loaning institution, and you're not embedding in your arrangements, in your loan arrangements, and you don't have DI in this to protect the players on a loan, I think you're really exposing yourself to tremendous monetary liability. And one step further than that, remember, it costs you nothing to do that. We're forcing the business people to take care of this. They want the loan, they got to play this way.
Absolutely, and the fact of the matter is that they'll increase the loan to cover the premium.
Right.
Yep.
They'll cover that as well.
Absolutely.
See, to me, I think we need to really be educators, and I love your idea. This could be a singular issue into the banks as a prospecting tool. Today, I'm only telling you about the bank loans that I've dealt with and the other institutions. They want to know, what are their competitors doing? What can they do to indemnify themselves? What can they bring their board that really makes the bank safer and insulates them from liability? I think that's a huge issue.
I do believe so.
So let's talk about it a little bit more. Okay, now on loan, I'm assuming that there might be caps to this, right?
Well, you're talking about loan indemnification?
Yeah.
Yeah, well, the cap would be the actual loan itself, the dollar amount of the loan.
So what's your biggest one you've ever seen? Has it been Colosso?
Oh, millions. $5 million.
What would you, I know this is hard to say, but what's the percentage to indemnify a $1 million loan,
right,
bank loan? What kind of money? I know it's age and specific and so forth, but just as a rule of thumb.
You might be looking at, for $1 million, somebody in their 40s, somewhere around $35,000, $4,000 a year in annual premium.
And again, that can be stacked on top of the loan during the loan provision, right?
That's right.
Okay, well, all right. This could be a way to build out your business. Everybody always asks me, Steve, you got anything distinctive? Got anything that'll cut me out of the pack? I think this could be a way. Yesterday we talked about business overhead expense being that. This could be another adjunct to that, or a total way to get into banks. Now, when we're talking to banks, I'm thinking of, I want to indemnify my loan from the bank. I'm going to indemnify the loan. I'm already telling them I'm indemnifying myself, my key people. That can't hurt your loan when you see all this covered.
Not at all.
To me, people ought to bring that in their loan. When they bring up not only their balance sheet, they should say, here are all the all-in indemnification scenarios I have on the books.
I like what you've just said. And the reason why I like what you said is because what you're doing is you're demonstrating to the banker themselves, as well as the other people that you're trying to create a relationship with in that bank, the fact that you've done your homework. Your client has done their homework. Mm-hmm. They're well prepared, which lends the credibility of maybe qualified for the loan.
Yeah, I think if I'm a banker, I'm just trying to be the banker for a moment. I got business overhead. I got key personnel insurance out. Now I'm getting loan, and my client has his own individual DI. This guy's covered whether he's dead or he's disabled. I love it.
Yep.
To me, that is the all-in scenario. When I think about, and I have this article coming out in May, buy term, but spend the difference on DI. I think that's the way to go. And remember, we're in a business scenario. This could be deductible depending upon how creative your client, your CPA is, or as Marcy said last week, the recharacterization of how you present it. I love that
There
word.
you go.
Recharacterization. Remember, you can watch all our shows this week on Business DI by going out to our website at thebiz.tv, and you can follow me on Twitter, Facebook, LinkedIn, Pinterest, and Google+. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.